Hello class, this is Brian from financialtrainingschool.com and welcome to BO204 Determination of Market Type. So this video is the third and final video out of 3 price action techniques, and then after this we'll be moving on to factors affecting how you use price action. And I just want to point your attention to this mistake that I made previously on the other PowerPoint slides. BO206 is actually chart setups. Previously I had chart time frames written here, and that video is already made in BO106, so I confused the two series, and this is equivalent to episode 5 of my How I Trade Binary Option series. So just a little brief introduction before we start on to the chart examples. By now you should have watched all the parts of BO202 and BO203, so continuing onwards, SR levels and trend lines are considered to be common knowledge now, so I just expect you to know it. Kind of like in school, first couple lessons, you teach something, that's the foundation, and moving onwards, you just build on it, so you're just expected to know it from now on. So now, I'm just going to use them freely, and you're just supposed to know it. So we'll be using these two techniques to help determine the market type. And the whole point of this lesson, the moral of it all, is to get you to realize that markets are dynamic, and that they're always changing. The markets will alternate back and forth between trends and ranges, Depending on the week, if it's a usual week, normally trends and ranges will probably last an hour up to a couple hours, or maybe at most a day. And then it's going to change to the next thing. So if it was a range for a day, it's going to change to a trend, etc., etc. The only time when it lasts longer than a day is when the market is anticipating a news release like unemployment data, or Bernanke is about to speak about quantitative easing, or Obama comes on to speak about something along those lines. Then in those cases, the market might range for a couple of days instead of one day or something like that. So just be aware of that, so that you get yourself in the mindset of transitioning. So if you watch the market for the past 6 hours, it's been ranging. Maybe it's going to start trending in the next couple hours. You know, you just have to be ready for that change, because once it breaks out of the range, you're going to start getting into the trending mindset. Once it breaks out of that trend, it might become a range. You need to get into the ranging mindset, etc., etc. And just a couple notes on trend lines that I missed in BO203. Trend lines can act as diagonal SR levels, and I showed this a few times in BO203, but I didn't mention it explicitly, so I'm mentioning it here because we'll be using it later on in BO206. So like traditional SR levels, which are horizontal, you have them at your highs and your lows, they determine the bounce points of your range. You can have the same thing diagonally, and that's what I did last time with the channel line, so that you see a downward channel, it's going to bounce between them. But then once it breaks that channel line and then goes down, it might form another channel below the above channel. That way the lower trend line previously might act as resistance instead of support, etc., etc. So something along those lines. And also the other thing that I should explicitly state so that people don't get confused, and normally people on the forums talk about this all the time, uptrends are characterized by higher highs and higher lows. So if you think about it, when you connect the lows in an uptrend, the lows are higher than the previous low, and then the highs are higher than the previous highs, etc. That's why it characterizes an upward staircase or lightning bolt going upwards. Same thing with downtrends. They're characterized by lower highs and lower lows. So the high previously, the next high is going to be lower, and then the low previously, the next low is going to be lower, etc., etc. So that's it for the brief introduction. Now we'll be starting on to the trade examples. So just like before, we'll be using free stock charts. This is the 5-minute chart on the USD CAD. This video shouldn't take that long. It should take maybe up to 30 minutes max. I don't intend to go through explicit trade examples. I won't be like, here's a trade, we expire, etc. We're mainly, at this point, we're just pointing out the transitions between trends and ranges, so we'll be speeding along. Like, I will still point out the trades and the potential places where you would place a trade, but I won't follow through with if it wins or loses. So now we're just going to use a black arrow or a blue arrow, something like that, just to illustrate that these are potential entries. You can determine yourself if there are wins or losses based on pausing the video and seeing where exactly it expires and all that stuff based on the trading session. If it's an Asian session or a US session, you'll be using the trading conditions of before. Here I just want to illustrate the transitions between ranges and trends, and how you use all the tools that you learned previously in BO202 and BO203. So starting off, this is on Monday midnight, and I'm zoomed out to 5 hours so far. So we're gonna zoom out from this point up to the 12-hour mark, because the 12-hour mark allows you to see the big picture for at least half a day's worth of data. So that's the optimum zooming point, and then after that we're just going to be moving forwards, and we're just going to be drawing SR levels and trend lines along the way. So now we can use both tools freely because you're supposed to know both of them by now anyways. So starting off at 12 a.m. basically at the beginning you can see that there's a low formed here, there's a bounce point there or somewhere like that, and then previously it bounced up here as well, and then up here on the top basically moving forwards you have that from that low, that high, and then you have one random spike up here because you can see it bounces up here, bounces down, comes up to here, almost touches it, bounce down, up to here, breaks. This is a spike, right? This is just a random spike. It goes up and then comes back down, and then here it acts as resistance again, and I'm guessing this is another spike. So we'll see what happens moving forwards, and basically that's all you can draw at this point. And you can maybe, if you want to, you can squeeze another line inside here just to see these bounce points, but having seen this, it's not relevant. So at this point we're not really trading anything yet, so we're just moving forwards to see what happens. I'll be zooming out one bar at a time. So zooming out, you can see here, this is just like another spike like I mentioned here. This is another spike like I mentioned there. Here it goes up. Here you would be placing a trade. Like I said before, I'm not going to be specific. This is the 20-minute mark, but I'm just mentioning that now for this example, but for future examples I don't care anymore. I'm just moving forwards to see what happens. Okay, so that's a potential entry, and then as we move forwards you can pause the video yourself to see if it expires in the money or not. So this was the 20-minute mark and we entered from that touch, and this is the Asian session. You can tell by the 30-minute mark it expires in the win, so this would be green. But for these trade examples I'm just going to keep the arrow as blue just to show you guys that these are trade entries. That's it. I don't care if they're wins or losses. You can keep track on your own. So now we're going to zoom out again and let's see what happens. So if it goes down here you might be tempted for a call. If it goes back up there you'd be tempted for a put. And here briefly you can see this is a high up here, and this is a high of that spike, and then this is a high of this spike which didn't break at this point. You might be thinking it's forming a trend. So now using your trend line tool you might be tempted to draw some lines, something like maybe like that. You just have to be creative. So we'll just ignore this spike, and then you draw one so that it touches right there to that top, and that kind of gets that. If not, you can create a parallel line and then line it up like that, something like that. I don't know, just be creative. Zooming out, let's see what happens. Zooming. At this point, tempted to make a call, so you do that. So this is a call. Looks like it might be breaking down though, because see here up to this point it didn't break below this point, but here it broke below. That means it punctured your support level, which means since it's punctured, that means the bulls aren't there defending this level. So it could potentially be weak in the future. But anyways, let's just see what happens. We're just picking trade entries, but it looks like it might break down. Let's see if it does. It does break down, and basically, wow, look at that. You fluke up, it wins at the end of the hour. So you would win this by fluke, but this breaking down, this is awkward. I guess there must be news here, but we're not worried about news in this video. I don't care about news. We're just going for chart examples. So let's see what happens moving onwards. You want to see if this continues going up to these trend lines up here, or does it continue going down? Moving, goes down, sideways. Hasn't really broken anything yet. You can see there's kind of a descending triangle. This is a downward trend line. This is support level here, and then it broke here, but then went back inside. So we're really waiting for it to break down totally. Moving onwards. Moving. I'm not trading this stuff because this is just weird, because now you can see now there's kind of a pennant. This will be covered more in depth in the next video, but this is basically a symmetrical triangle. So something like that. Symmetrical triangle is basically whichever direction it breaks out from either this trend line or the bottom trend line is the direction that it's going to go, usually. Or it can also go sideways, which is kind of weird, which is why I don't like using symmetrical triangles. Moving onwards, it goes down, breaks down, and it looks like it's going to go down. But then it goes back inside. So you see how this previously is an upward trend line, and up here it starts acting as resistance so that hopefully it's going to push it down. And this pattern formation in combination with this old support level, which is now resistance, kind of all just accumulates into this angle right here. So you could have placed a trade there, but I'm not really observing for that. So anyways, let's just move forwards. What I wanted to do is, looks like it's getting into a trend, which is interesting. Then that's where I want to be placing the trades. See, now it's choppy and it breaks back up. So this is awkward, which is why we're not waiting. If it goes up to this trend line, that would be a good trade though. So let's just keep zooming out. So at this point, since I said it went up to that trend line, I would have been placing a put there, and we'll see if it wins or loses in the next 15 minutes actually, since this is US session now. Anyways, moving 15 minutes would have lost. I want to remove this, remove that, that's useless. This stuff is useless as well. Let's just move this one to like that, to that peak, and this point moves to that peak. Or maybe we'll just do something like that as well. You just have to be creative. Pick the number of points that it touches the most. See here, it has that peak there, and that peak, and that peak, and then kind of here, and this is a random spike. We'll see what happens. And moving forwards, moving, and it goes down. So let's just keep zooming out. I don't want to trade just yet. Zooming. This trade I would put right there. This is the 30-minute mark, and this is right when the US session is about to open. But I would place a trade there, see what happens, and you would end up winning that one. And now it looks kind of weird. This support level I would erase because it's right in the middle anyways. That's kind of awkward placement for it. But here you can kind of see there's this trend here. This is a high, this is a lower high, this is an even lower high there, and then this is a low, a lower low, and a lower low. So it looks like a downtrend is forming. So what you want to do is create a parallel line and try to fit it in. So this is from the high, so this is a direct relation of the highs, and this looks pretty perfect. You have bounce, 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 like that, and this is from these highs here. So this looks good. In addition, we'll see what happens as more bars are formed. We might want to move these lines. So I just want to create multiple levels just in case, because we have these other touches here. Want to move one to say right there, so that you have these two red wicks there, these green things there, and we'll just move another one to say something like that one, because we have these things here, and these wicks, those wicks, etc. So we have some low levels here, and let's just create some more levels up here as well for the other levels. So that high there and that high there. You just gotta be creative when you're doing this stuff, and we'll put one at the absolute. So this is what looks to be a downtrend in the formation. I characterized the lower highs and the lower lows for you guys. So let's see what happens moving forward. This one is at the 45-minute mark. It did go up to touch these levels again, so I would be placing a put at the original trend line, which is similar to where this original put was, and we'll see what happens there moving forwards, and it does win. So that's good. This is characterized by lower highs. You had this high, and now these highs are lower than that high, so that's still in line with what you characterize a downtrend with. We're at the 10 a.m. mark now, so 2 more hours of zooming out, and then we'll be just moving forwards with the chart. So zooming out again, so here it touches the lower trend line, tempted, so let's just place another put there. See, because it's a downtrend, so we're looking for puts, because it's going to go down, it's trending down, you know it's more likely for it to go down, so you want to place puts. You wouldn't really like placing calls in a downtrend, because what if it just spikes down? That would be a problem. So we're looking for puts, which is why I'm aggressively trading all the puts of the trend lines. Although this is kind of really aggressive because it's touching this. Price, you can see, is trying really hard to break above these levels, but the trend lines are in motion and traders aren't letting them go up. It tries again here, it doesn't do it. It tries again here, it doesn't do it. Moving onwards, it does close below. It doesn't come back up anymore, but you can see it's starting to get choppy here, and you can kind of see in another descending triangle again with your support level drawn kind of like that, and maybe you might want to draw another level below it like that. So you have these double supports here. We just changed it to green just to be more clear. See how there's lower highs on the top, and then you can see the supports down here that are trying to break. As soon as it breaks down below these levels, then that's just continuation of the downtrend. And as I mentioned before, in BO203, your trend should be staircase fashion. See how it goes down, then it pulls back, it goes up, and then it goes down, and then it should pull back, go up, and then go down and up and down, up and down. It looks like a staircase. Moving, moving, moving. So here it touches again. I would place a put there again. So we're expecting lower highs anyway, so it doesn't really matter at this point. These two trend lines are basically 1 pip apart, so it's not a big deal. So moving forward, so this was the 35 minute mark, so the next bar should be red for it to win. And it does win, so it does. That one wins, and this one goes up again. We wouldn't trade on that candle. Moving forwards, hey, look at that. Big red bar. I'm assuming news might have came out or something happened, but basically you can see the fashion. See, price moves initially from down here like that, then up, down, consolidating a bit, up, consolidating a lot for 3 hours. Look at all these dojis here. You can see dojis, pin bars, pin bars, pin bars, pin bars, dojis. I haven't made an engulfing candle video yet, but this is an engulfing candle right here. This big red one right here beside this green one, and that's an engulfing, etc. So now down here, if you are a risky trader, you would place a call if you wanted to, because this is touching your lower trend line. It could bounce, or it could just break through like that. If it breaks through like that, then you have problems. So now that it has made a new low, what you want to do is you want to make new trend lines. So say something like this. That one. Now moving forwards, and then it bounces there. And then moving up, as soon as it reaches this downward point, well, actually I'm going to make a parallel line from that one, since that's a new trend. Say maybe like that. Somewhere in this region we'll be facing a put. I'm almost done zooming out. And nope, doesn't get up there. It goes back down. And now we're moving forwards. So this is now 12 hours worth of candles, and we're about almost 20 minutes into the video, so we'll be moving faster now. Moving. We're not placing trades unless it touches the trend lines. At this point, you might want to consider drawing new trend lines because it's not really touching anymore. So it might be forming something steeper, might be changing angles, for example, to something like that. But you want to be careful because sometimes it just gets steep within the bounce. So see, this goes up and then down, and then it might go up again. You don't know. So let's just move it forwards. Moving. Up to there, it breaks, and now see, as you scroll forwards, you can see the channel is still forming. So the blue lines are where the channel actually is, but in this angle, at this point right here, this is close to that high. But here, this is now in the middle, so you wouldn't want to place a trade here, because this trend line in the overall bigger trend is only in the middle. So this is a 50-50. So you would remove this at this point and watch to see what happens. So let's just keep moving along. I'm not placing any trades, by the way. We might be considering placing trades on this lower trend line, or maybe a touch of that trend line, but this is not a lower yet. Notice, this is a low, this is a lower low, this is not lower than that low. So you wouldn't place a call yet, because unless you know it's going to start ranging soon. So let's just move. moving, moving, moving. This one looks like a potential call coming up. Okay, so because this is actually a new low now. That was not a new low, but it did bounce. But we don't like those trades. I just want to clean up the trend lines. Let's just remove some of these things. Let's remove that one, and we're just going to start removing these ones as well, since they're kind of awkward. And you can notice how here, scrolling forward, since I scrolled too far ahead, I didn't notice this before, but these support levels were acting as resistance here, so you could have placed some trade examples there as well. See, you could have placed a put maybe there, there. You know, although it was in the middle of your trend, so right here is about the 50% mark between this line and that line, or maybe 60% mark. Here probably 70% mark, and then here would have been 80% mark. So, you know, these are decent trades around here, and that's usually how the markets work. So let's just keep scrolling forwards. Okay, at this point, this is getting really close to the trend line. As you can see from the trend lines, price is currently here. At this 5-minute mark in time, price wants to touch this low point of the trend line, which is 1 pip below. If you go to the next 5-minute bar, the trend line will be lower. That's why the lows are different entries, which I mentioned in the BO203 videos, because since we're in a trend, your entries will change. So the next entry will be different from the last entry. So depending on what point in time you're at, the trend line will be a different entry. So, but we are looking for a call somewhere in this neighborhood, since it did bounce previously there, although these are more dangerous than before. So here you can see the next bar actually did touch that lower trend line, and that's what I meant about the entries changing. At this 5-minute mark, you would enter at that point of the trend line. The next one is kind of lower, and you would enter there. So we're expecting to see a bounce here. See what happens though. It does bounce, and it looks like you're gonna win. Next one goes down again. Tempted the same level. If you want to draw a support level, this would be another trade potentially, and it's only a couple pips off from your trend line. So you trade there, and then let's see what happens. Sorry if the chart is changing sizes. The ads on Free Stock Charts is moving the recording screen. Moving forwards, that one looks like it's going to win as well, and it does win. See what happens. And see, now you can see it's kind of entering a range, kind of stuck like that. So this is kind of what I meant by before. See, these were consolidation ranges. Those were ranges, or kind of weird consolidation areas inside a bigger trend. So they do happen. See what happens though. The probability says that it's going to bounce up there. That's what the probability says. But it could just consolidate and then try to go back down or something. See what happens. It might looks like it's going to break this. Or no. There, if you wanted to place a put, you could have placed a put there based on these two highs. And then it goes onwards and it goes back down. And now look at that. It's been ranging, still ranging. So here I would place a put right there. This trend line I'm going to remove now, since it's now obsolete, since it's crossing in the middle. But here you can see how there's a range forming. It trends and then it ranges. This is a 3-hour. Clearly it had direction, but the movement wasn't that much. This was 36.5 down up there, and it moved down to 21.2. So that's what, 14 pips. So that's not a big movement. That would be kind of awkward as well, because you enter your trade but it doesn't move. This one ends up losing. That's fine. But now you're questioning, is it a breakout? Because it did break. It does close above your resistance. Moving forwards, it goes back down, ranges, continues ranges. But here now, look at this. You see this trend forming, these higher lows. It might be gearing up to break out. Creating a parallel line, you can see how there's actually a channel like that inside this smaller range. Inside a smaller range, you have this small trend to bounce from the low to the high, to the low, to the high, to the low, to the high, etc. And let's see, it continues to range. Look, you saw these lines drew from, what, 5 minutes ago or something, and it still kept this range. So if you were placing there, that would be a put. Although given given this has happened, and you might think that this looks like an ascending triangle, but no. Realistically speaking, for the past 1, 2, 3, 4 hours, it's been ranging inside here. So no, you would erase this, and now it looks more like a range than it does a trend. So here at this low, you would be placing a call, although this is the end of the hour. But if you wanted to, that would be a call, and you can see this range is happening. But we still have this overall big trend downwards. So we're waiting to see what happens. Is it going to break out of this range sometime soon? Because it's been 4 hours. Moving onwards, moving onwards, moving onwards. Looks like it's about to make a down move. Because look at those candles. Oh, it bounces again. And you could be placing another trade there. And moving forward, see what happens. And there's another trade, bounce up. You just keep doing this. Obviously, I'm scrolling forwards ahead in time fast, but in real time, if you're trading this in real time, you have to remember that from 3 p.m. to 8 p.m., this is 5 hours. So you're sitting here for 5 hours waiting for price to get to your level, and then you enter, because this level up here is the 100% or 90%, 95%, whatever percent you put as high probability up there for puts down. And then here you have calls up. I missed one here actually. This should have been a call there. But I mean, the levels were drawn from way back here, way back there, and they're still here. But here it's been now 5 hours. So it's going to break out of this range soon, because this is now 8 p.m. So between 4 p.m. to 7 p.m. you expect it, because that's the off market, the pre-market and after-market of US and Australian session. 8 p.m. is when Asian sessions open, so this is when you expect liquidity to slightly increase. So we'll see what happens moving forward. It's going to break. There looks like it might break, but who cares? We're just going to place a call there. Or actually, no, this would be Asian, and we wouldn't actually be able to place that trade. But if you wanted to, that would have been a trade opportunity. But it looks like it might break down. That's just me guessing. Doesn't break down yet. Still there. And down there it breaks down. And kind of, you can see here a mini trend. You get a high there. Lower high. Lower high. Couldn't break above that. And then it goes down. You normally don't pay attention to lower highs and lower lows or any of the trend line characteristics for trending markets inside a range, because you're just expecting to bounce up and down, up and down, up and down anyways, so it doesn't really matter. But here it does break down outside of the range. So if you were to trade the initial trade of a breakout, or breakdown I mean, you would be placing a put right there, and then it would go down. And it does go down. Continuing going down, let's see what happens. This trend line right here, we're expecting a bounce sometime soon down there. Otherwise, we're maybe a put up here. See how this downward trend line along with this resistance level would be a combination of probability levels. And I'm just going to do another 10 minutes and then we'll stop. So we're at like about the 30-minute mark now. So let's see what happens. Moving. It's kind of, you can draw tiny in the middle trend lines so that you have something like, say like this. This is the problem with free stock charts. You move two lines at the same time. So that's the inner channel, and then create a parallel one, and then we make another channel like that. As you can see here, price bounce between inside here, but this is inside the bigger downtrend. So these are kind of risky trades. See, like here, if you place a call at that point, that would be good. But if you place a call here at the 50-minute mark, which you wouldn't be able to anyways, then it would just go down. So let's just move forward, see what happens. So moving, still moving, and then breaks that one. This is why I don't like drawing them, but I just wanted to show it. And at this point, so you would erase that, obsolete. That one, we can keep that there if you want. This is near parity, okay? 1-to-1 USD CAD. So near parity, there's a lot of weird action. So this is 3 pips away from parity, 4 pips away from parity. So, but even here, that's why it's consolidating. It ranges between, what is this, 4.5 up to 7.3. This is a 3 pip range. I mean, with a 3 pip range, you kind of have to realize that this is kind of hard to trade, because 3 pips is a very small area, very small leeway on the top and the bottom. because if you're even a half a pip away from the bottom of the top, that's already 1/6 of the range, which is what is that, 16% off. So that's weird. Moving forwards, and look at that. It reached up to our higher trend line from before, and I would place a put right there. See what happens? I don't know. Maybe it's gonna break out of this thing. Who knows? Moving forwards, see what happens. It goes down. Look at that. Win. Okay, so moving forwards again. Here's another touch there, or close touch anyways. Place another put there, and then moving forwards. That one does win. This one, you would place another one, even though we saw the next bar. Who cares? We're just going to place a put there. Looks like it could break out though. And does it break out? Does it come back in time? We entered the 5-minute mark. This would be the 30-minute mark. 30-minute mark, you win by fluke. You win by a sheer, what is that, 0.6 pips. So that would be break even. If we were on the other chart examples, I would change this to a black arrow, but who cares? But now at this point, you can see this was kind of consolidating here. So if you wanted to, you could draw channel lines like this, although it's not really a channel. If you ignore this spike down, then you would have channels like this, and then you get this breakout, which then makes this new trend, which kind of forms like that, and then you just keep going. And that's the whole point of this video. Hope you guys got the moral of it. It just changes. You start at the beginning, you have this. Initially we had this consolidation range here, and then it starts making these lower lows and lower highs, starting a downtrend. Consolidates here, consolidates there, weirdly. Past this breakout point or breakdown point, it starts to trend really hard. And then you get these points down here, and then trending here, and then here. This is a trend. If you were aggressive, you would be trading individual trend lines, drawing from there to there and there and to there, and you could draw them and trade them. But I don't like doing this inside a bigger trend, so I wouldn't bother. But depending on what style you trade, then you do it, up to you. You could have that. And then here, as you saw with this range, which I prefer trading ranges personally because it's easier, because it's just up and down, up and down, up and down, up and down, up and down. That's easy. And then once it breaks out of this point, you're looking for it to touch your lower trend line. Doesn't happen. Here it ranges again. You could have traded here a few times, here a few calls here, maybe a few puts there, and then you lose this one, which is fine, and then it breaks out and you trade the breakout. Here you would, so here you could place calls. So I'm just going to place the arrows just so that's easier to see where you would have placed it based on the lines drawn. Maybe something like that. Something like that. And yes, you can say that I'm cheating since we saw it, but this is just for the sake of examples. When you do this in real time, obviously it's going to be different, but as long as you have your mindset of you draw SR levels, you draw your trend lines, you know where to place your trades. Trust me, after some experience, you just know when it's right, and that's kind of trader's intuition, which can't really be explained. That's more experience. So once you gain enough experience, you just know, and that's just how it is. So here, at this point, after ranging for, 4 hours, it's going to break out. So you would lose this one, that's fine, but here it breaks out, and then it comes back to the old resistance level, and then that's where you place your pullback entry. Alternatively, if you were in the other mindset and you didn't want to place a resistance put here, you could have also placed a breakout trade as soon as it broke above. And in Forex, you would have a buy stop order basically for that, but that's for the Forex series. And then at this point, you just draw the trend line and you trade here. So then this is another entry there, but this is Asian session. So actually no, this is the end of the Asian session, so you wouldn't really enter at that point anyways. At this point, you have this higher trend line from before, and then at this point, you might have been trading here, a call there. So you couldn't enter before the end of the hour, but you can enter for the next hour, and that'd be fine. Enter there. And up here, if you want to go puts off the higher trend line, there would be a trade there, something like that. These lines were drawn from before, so technically I didn't cheat in that regard. The lines were there. The trades, whether or not you take them, is up to you, and we're basically trading touches. I just trade touches. I draw a line. If it touches my line, I'm trading a touch. That's it. End of discussion. If it touches the higher one, I'm going to place a put. If it touches the bottom one, I'm going to place a call. Simple. Here, top ones you place puts, bottoms you place calls. Should be a relatively simple concept to grasp, and it just goes onwards. And then here, this is, you see a spike, and let's just zoom forward, see what happens. Here, it starts consolidating, and then it starts ranging. See, all of this is consolidation, and here's a big range. This range, you can literally draw it like that, and then you create a parallel line, something like that, and then you trade them accordingly. And then it's just going to trend, and then it starts to consolidate down there. So it trends down, and then trends upwards. This is, I don't remember what the name of this is. I think it's a pennant, or not a pennant. I don't recall what it is. But this is when you have a shrinking triangle. I'm blanking out right now. I don't know what it's called. The triangle is shrinking, as you can see here. And normally what happens at the end of the shrinking is it's going to pick a direction. In this case, it just continues being choppy, so that's kind of weird. And then it consolidates. Here, you can draw a range like that, and then another range up to there like that. And this old support level from before is becoming resistance now. And you just continue onward. So now this is consolidating here inside this range. So here it breaks down. Maybe it's going to start trending again. See what happens. Moving, and look at that, it trends. I really hope nobody's surprised. I just mentioned this over and over and over again. You just do it. It should become common sense at some point. It's going to be trending and then ranging and then trending and ranging. See, look. Trend, range, trend. Look at that. A couple hours. And then now this is going to last, a couple hours. And then at some point it's going to start ranging again. And then maybe, see here, it starts ranging inside here. This is a big range. And then it's going to break out and start trending again. And that's it. So that concludes the chart examples. I hope you understand the whole point of transitioning between ranges and trends. So just some final thoughts before we end off the video. From BO202, 203, and 204, you're now equipped with the basic price action techniques to help you trade. If necessary in the future, I will add on additional parts to this lesson, so make sure you subscribe to my channel so that you get these updates. Moving forwards, we'll start analyzing factors affecting PA. Some of the videos might be reused from my old series. I have to rewatch all of them first to determine the quality of them, because I did these back in January and February, so I was kind of a newbie back then when I was making these tutorial videos. So now that I'm better at teaching these videos, I know what's required of me. So depending on the quality, I may redo them, maybe not. If I do reuse them, I will mention it at the beginning of the video. So I'll mention something like welcome to BO205 pattern formations, blah 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 blah, introduction. And then the chart examples in this video will be reused from my old How I Trade Binary Option series. And so if you have watched those already, you can just skip this, something like that. I'll just mention that in the beginning of the video so you guys don't waste your time. For those of you that haven't watched the original series, then when I do these, you can just watch it as if you're watching it for the first time. Then for other videos like BO206 chart setups, this will be revamped completely, because I specifically want to revamp this one since I've had more experience with setting up charts now for my Forex weekly analysis in the past 6 months. So for those of you that aren't already subscribed, go on my blog, financialtrainingjournal.com. You can sign up for the newsletter or just go on there every Saturday. Usually in the afternoon, I'll have my Forex weekly analysis posted so that you can view them for what to expect in the next week. When we do this video, you'll understand more of it. So that concludes this video. As usual, my recommended brokers are 24 Option, Bank to Binary, and Trade Rush. Make sure you guys use my links when you sign up so you can get an hour of tutoring with me. So I hope you guys enjoyed this video, and I'll see you guys next time.